Uranium prices are set to continue their impressive surge, projected to finish the year more than 50% higher at $80 per pound, driven by heightened concerns about climate change and a global shift toward cleaner energy, including nuclear power. The current spot price of around $81 per pound is the highest since the 2011 Fukushima disaster and reflects a 40% increase this year. Factors such as a focus on energy security post-Russia's invasion of Ukraine, limited supplies due to underinvestment, geopolitical risks, and the dominance of state-owned entities contribute to the momentum. Utilities are rushing to secure uranium with term contract volumes exceeding 118 million pounds, the highest in over a decade. Despite uranium's diverse applications, especially in nuclear energy, its increasing demand is anticipated to surpass available supply by 2035. Uranium prices stabilized in July, but a coup in Niger led to supply interruptions as Benin closed its borders, impacting uranium production due to a lack of essential chemicals. Despite a modest initial impact on the market, uranium spot prices rose sharply in early September. Cameco's production update on September 3rd indicated a decrease in production at Cigar Lake and McArthur River mines, contributing to uncertainties in uranium supply. Facing equipment issues and shortages, Cameco, a leading Canada-based uranium supplier, emphasizes the challenges of re-energizing uranium mines. Euratom's spokesperson downplays short-term risks but acknowledges potential long-term deposit challenges. Disproving optimistic statements, Cameco's press release reveals the inability to quickly resume U3O8 production, emphasizing a lack of available reserves. Seeking a solution, Kazatomprom plans a major transaction with China's SNURDC, underscoring the urgency to secure uranium resources. The financial sector speculates on uranium prices increases, driven by government support for nuclear power. However, conflicting views emerge, with institutional investors excluding nuclear power, and uncertainties in the global economy affect predictions. As the world faces economic challenges, the uranium market's future remains uncertain. The World Bank and IMF report conflicting views on global economic recovery, adding complexity to forecasting uranium prices. Amid geopolitical tensions, Rosatom emerges as a stable uranium source, although specific transaction details are undisclosed. Ultimately, predicting uranium prices by year-end becomes a captivating financial endeavor, given the diverse factors at play. But we give it a try. Due to our analysis, we see uranium prices moving higher. The demand-supply imbalance is not shrinking, and we expect a further growing deficit. The new AI technologies require enormous computer capacities which need to be powered. UEC is partnering with Bill Gates' TerraPower to supply the uranium for the small modular reactors in the future for the data centers they want to build to power supply them locally. It is like with Bitcoin. It needs a lot power, which has to be baseload power, meaning stable. Uranium Energy Corporation is a top investment in the uranium space and will be next year the first real US uranium producer back in production. The share price has hit our first target at $6.50 and the next target is $10.50. And then, longer term, we see $18 to $20 possible when uranium prices hit plus $150 per pound. UEC is a must-have when you want to invest into uranium. Just merging together are IsoEnergy and Consolidated Uranium. The project base is complementary in top-tier uranium jurisdictions like Canada, USA, and Australia. They have a fantastic exploration upside across entire portfolio, will rank among the top publicly traded uranium companies. Also, they are focused on production with the goal to build a globally significant multi-asset, multi-jurisdiction uranium producer. The growing uranium market presence is positive too, and to increase commercial participation in the nuclear fuel market. After the oversubscribed $36.6 million Canadian financing, they have a strong shareholder base with NextGen, Energy Fuels, Mega Uranium, and Sejam Cove. The point and figure chart shows next price target of $5.5 and $6.5 Canadian. Longer term, we see $10 Canadian possible. Uranium is hot, and with 433 operating reactors in 32 countries, 61 reactors under construction in 18 countries, and uncovered uranium requirements of approximately 2.3 billion pounds through 2040. This market is a no-brainer. More than 500 million pounds are uncovered through 2030, with utility activity increasing. The era of the inventory overhang is over, and we need fast new production as inventories no longer cover shortfalls. But you cannot press the button to start a new mine. This takes in average 15 to 20 years for a large uranium mine. We are bullish for uranium prices and even more for great uranium companies like UEC, IsoEnergy, Labrador Uranium Energy Fuels and Denison Mines. I'm Jochen Staiger, Swiss Resource Capital AG in partnership with Dukascopy TV. Thanks for watching us and bye bye from Switzerland.